Thank you for joining me. I'm Alex, and I would like to talk to you about Tesla, and that's because I'm extremely excited about what they reported and specifically what the outlook is for the next couple years. But first, even though I've covered it before, I'd like to go over the basics. What they do is electric cars, solar panels, and batteries, and minor other stuff. Current price is $254, which gives them a market cap of $46 billion, but they went up about 20% after hours, so currently the price is over $300, which gives them a market cap of $54-ish billion. So obviously huge gains there, and that's why I'm covering that today. Dividend obviously zero. Revenue $21 billion, which is up 75% from the previous year. Earnings negative $1 billion, which is down, I guess, from $2 billion of a loss in the previous year. And that gives them a PE of about negative 120. So they're losing, or they lost in the past year, $3.60 on a $250-ish stock. So actually not that bad. Total assets, $30 billion. Total liabilities, $24 billion. Total stockholders' equity, $5 billion. And pretty much everything going in the right direction and fast. So, the earnings call today was mostly about they managed to have a profit this quarter, or Q3 2019, where they were expected to lose about 42 cents per share. They gained about $1.90 per share. So not only are they beating it, they're just crushing it. And there's the outlook for the next year that is so extremely exciting for me. And what many analysts get wrong is about the Gigafactory in China, but I'll cover that later. So they said that Gigafactory China is producing cars right now, basically. So they're saying that they're doing paint, they're doing body, they're doing general assembly, which does not necessarily mean they're producing the whole car there right now, but they're getting extremely close to that. I would assume that there's a few things that they're not doing there yet that they had to ship in from the US, but they haven't released specifics because, that would probably give more people more of a clue on where things stand exactly, and they probably don't want that right now. But Gigafactory China is ahead of schedule and is probably going to produce cars this year. Then they said Model Y is in test production right now, which is why there's been some sightings of Model Ys around in the wild. And they're going to release or start shipping them in summer 2020. So less than 9 months away, and I assume that if everything goes well, that could be even sooner. And then Gigafactory China, they said that they reduced capex per unit of about 65%. And in the amazing video that Gally did on Hyperchange, he mentioned that it's going to be 65% cheaper to produce the car there, which is not the case. And Ali's World of Stocks actually made the same mistake. CapEx does not mean that it's that much cheaper to produce the car. It's just the machines at the factory that will produce the car are 65% cheaper than the Model 3 line that they initially built in Fremont. The major costs are still materials and workers. So obviously the capital expenditures is reduced by a significant amount. I assume also the workers are reduced by a significant amount because they learned so much from building the machines and calibrating the machines in production hell for the Model 3 that they have an easier time setting all that up and probably don't need as many people in China as they do right now in Fremont to produce the Model 3. So while I think that there will be a significant reduction in cost in the Model 3 in China, there will not be a 65% reduction in cost. It's just that the capital expenditures that will be amortized over time will be significantly lower, which means that more of the car is profit and counted as that, rather than, having to build more machines, more of a factory and all that. So it's just a slight accounting thing versus an actual profit margin on the vehicle. That means that the factory and the production line was significantly cheaper, but that's paid for already. So it's already on the balance sheet. It's just that the accounting for that comes later. So all that, and especially semi-truck, probably in production in 2021, probably early 2021. So everything looks amazing right now. And I assume that going forward, they will have a fairly significant profit. And depending on how the China Gigafactory ramps up, I think that they will be significantly over their target of 105,000 cars in Q4. And I do think that they will generate a significant profit there, and they will start actually sinking some money into the Gigafactory in Europe over the next year. So they're saying that they're very close to announcing a location for it, which then means that they can start planning it, getting it built, and all that, with significant expenditures. And obviously they have over $5 billion on the balance sheet right now in cash and cash equivalents. So that means that they should not have any problem paying for that, especially with profits from their current cars coming in, especially if the China Gigafactory ramps up very quickly. So I think that even at the $300 or $306 or whatever it's at right now, I think that Tesla is a strong buy, and I think that the stock has the potential to go 200%, 300%, even more in 5 to 10-ish years. So if that's your horizon and you can deal with the swings without, trying to sell it or do any significant moves, it's going to be a very volatile stock even over the next 5 years, but I think that it will go up quite significantly over the near term. So if you can handle the swings, I think it's a good stock, especially for a growth investor. If you're very hesitant to invest in companies that don't currently have a profit, I think that you could wait another couple quarters, in which case I think that they will be technically a profitable company, but I think it's not advisable to wait for that. So even for a value investor, I think that you should probably get into the stock right now rather than waiting for them to be profitable. And obviously for a dividend investor, you're out. It's still a great stock. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.